So friends, I think we are live now. So indeed, a warm welcome to ZEST Learning. How are you all doing? I hope you all are doing wonderfully well. So friends, in this today's session of sums of indirect taxes, we are going to do the sums of customs. Yes, you heard it right. We are going to do the sums of customs. Doing the sums of customs takes us ahead. Okay, takes us ahead. It takes us 5 marks ahead, 10 marks ahead in the indirect taxes. Customs and FTP carries a substantial weightage, 30 marks weightage in your syllabus. So from that, surely valuation under customs, that is value of imports and value of exports, will also have substantial weightage. So friends, if you have not yet subscribed to the channel, if you have not yet hit the bell icon, go ahead, don't be shy, do subscribe to the channel, do hit the bell icon. This is our session number 9, and please note that in earlier 8 sessions we have done valuation under GST, means finding out the value of supply. Then we have done scope of supply, RCM, exemptions, time of supply, place of supply, ITC, and yes, we are still in the process of doing ITC also in upcoming sessions. Then yesterday we did TDS and TCS. In the upcoming sessions we will be doing other topics as well, but I thought let us do the weightage oriented topic first. So now today's session we are going to do customs. So are you ready for valuation under customs? Yes or no? Tell me. So valuation under customs is going to be the topic of discussion. You will enjoy it. Not only discussion, we will do detailed sum solving of the same. So in the page, I am on page, check. What is the page number? Page number is yes, 135. Let us start. So it's not only discussion, it is about solving also. So it's okay even if we do less question in today's session, but I would love to solve them with notes and in detail. Okay, so see, lot of basics of customs will also get clear. Global Traders Private Limited imported certain goods for subsequent sale in India at an accessible value. So its accessible value is given at $12,000. So yes, you know that in case of imports, accessible value is nothing but CIF value. Yes, sir. But what is CIF value? Tell us, sir. So let me tell you what is CIF value, and let me tell you in general how is value calculated in case of imports. Okay, in a simple diagram, let me explain you that. So where are our handwritten notes? Yes, opening our handwritten notes, which we are on daily basis enhancing, and at the end of the batch, I will pass on this handwritten notes to you. Yes, we are on to page 23 of that handwritten notes also. So see, suppose from US, the goods are being imported in India. From US, the goods are being imported into India. This is the factory or the shop. This is the factory or the shop of exporter. Did you understand? From his shop, the goods went to the port of the exporter. So all of you understand, this is exporter. Yes, sir. Now, friends, in India, the importer is sitting. The importer is in India. So, in India, the goods reach. Okay, so here is the international water, or here is the air. So whatever way the goods are transported, the goods are transported in whatever way, and then there is an insurance also taken out. So here the price of the goods is called as FOB price, that is free on board price. Which price it is called as? Free on board price. Now when you add transport and when you add insurance, you get CIF price, that is cost inclusive of insurance and freight. Okay, so this CIF price at importer's port is called as accessible value. I hope all of you remember this basics. Yes, sir. This basics to we remember. And do you all remember that this CIF value may be in foreign currency? Dollars is representing foreign currency. You will have to convert this in rupees. Now ask me how to convert this in rupees. Simple. Apply rate of exchange. Apply rate of exchange notified by whom? Notified by Central Board of Indirect Taxes and Customs. Apply rate of exchange notified by CBIC, Central Board of Indirect Taxes and Customs, as on which date? As on date of presentation of bill of entry. As on date of presentation of bill of entry. Remember this. Okay, all of you comfortable? As on date of presentation of bill of entry, you will apply the rate of exchange notified by CBIC. Clear? Then you will convert your CIF value, that is accessible value, in terms of rupees. Make sense? Yes, sir. Now, friends, comes the question how to calculate this transport cost and how to calculate the insurance cost. So, let me just quickly recap that also for you. As far as transport cost is concerned, which transport we are talking about, from the exporter's port to the importer's port. So there are two possibilities. Transport cost could be known or transport cost could be not known. Friends, if transport cost is not known, you are supposed to take 20% of FOB. If transport cost is not known, you are supposed to take 20% of FOB. If it is known, there are two possibilities. Transport could be by air or it could be by any other mode. If the transport is by any other mode, you take actual. You take actual. Okay, but if it is by air, then government is bit, what you can say, then government is bit relaxed. They are giving you bit relaxation. They are bit liberal with you. They are saying take actual or 20% of FOB, whichever is lower. So of course lower is in your favor only, because accessible value you want as low as possible. After transport you will take insurance. How much insurance we will take, sir? So very simple, two possibilities. Insurance cost could be known or insurance cost is not known. If insurance cost is known, please take actual. If it is not known, then take 1.125% of FOB. Make sense? So that's about your insurance. And remember, FOB price is the price at exporter's port. It may happen that at the factory or shop of exporter, the price is given. And then there is a transport cost and other costs given for bringing the goods till the exporter's port. So if there is any transport cost or any insurance or any loading charges, they also should be added. They also should be added. Clear? It could be anything. They also should be added to FOB. Okay, so this is about your value of imports. Now one more thing I would like to tell you, that there is adjustment of 10(1). What is 10(1)? So adjustment of rule 10(1) of customs valuation rules. Sir, what is this adjustment? Now all of you know adjustment of this transport and insurance. This transport and insurance is as per 10(2) of customs valuation rules. Transport and insurance is as per 10(2) of customs valuation rules. Now what is 10(1) adjustment? Try to understand. These amounts of 10(1) adjustment, it will be added while getting FOB. It will be added while getting FOB as per customs. Okay, it will be added while getting FOB as per customs. So what are these adjustments of 10(1)? So first of all, any designing charges, actually I can say any cost of goods, any value or cost of goods or services supplied free. Supplied free to whom? Supplied free to whom? Supplied free to exporter. By whom? By importer. So actually now importer is paying price plus he is giving this goods or services free of cost to the exporter. So price of this also will be added. Okay, also add any commission. What you should add? Any commission paid by whom? Paid by any commission paid by importer you should add, but that should be other than buying commission. Okay, other than buying commission. Okay, so now it's time to apply all these things. Now it's time to apply all these things. And whenever now you get assessable value, how to calculate the customs duties payable? Understand? So you will get assessable value for levy of, mostly you will levy on this the basic custom duty. So you have got that now. Okay, in that you add basic custom duty. At what percentage you will take this basic custom duty? That also I am going to tell you. So I am going to tell you in the upcoming part of the session. So you add basic custom duty. Compulsorily you add social welfare surcharge at 10% of basic custom duty. Now what do we get? Now we get assessable value for levy of IGST. Got it? Now charge IGST. Now charge IGST. Okay, IGST will be at the rate as applicable on goods or services in India. Okay, so you will add that IGST, and you will also add cess, that is compensation cess. So let me write in detail. You will also add compensation cess if applicable. Of course, it is applicable only in very few situations. So it will be compensation cess if applicable on AV for IGST. On that only you will add. Now friends, you will get total cost. What you will get now? You will get now total cost of imported goods. So basically total cost of imported goods is assessable value for levy of BCD plus BCD plus SWS plus IGST plus cess if applicable. Now if you want, you can calculate total customs duty payable. So your total customs duty payable shall be what? It shall be BCD, basic custom duty, plus social welfare surcharge, plus IGST, plus cess. So friends, this is your total customs duty payable. Now I hope with this background, we can solve many questions today. So ready all of you? Just let me know in the chat window, friends. See now. Achan, one thing I forgot to tell you, that as on which date you will take the rate of basic customs duty. So I cannot go ahead without telling you that. This I had put a star mark here. BCD at what percentage? So friends, basic customs duty shall be at the rate as applicable on, okay, as applicable on a date of presentation of bill of entry, date of presentation of bill of entry, or entry inwards of vessel, or entry inwards of vessel or aircraft, as the case may be. Out of this, whichever is later. So as on that date, you have to check what is the rate of basic custom duty. When you give that document called as bill of entry, or when actually your vessel comes into India, okay, whichever is later, that date you should check. So we are doing, which topic we are doing, Nimiji? Just guide in the chat window to our beloved friend. So see, Messrs Global Traders Private Limited imported certain goods for subsequent sale in India, where the assessable value is already given, $12,000. Point is, convert this in rupees. How to convert this in rupees? Take the date of presentation of bill of entry. So the date of presentation of bill of entry is 10th Jan, and as on that date, the exchange rate declared by CBIC is 72 rupees per dollar. So take that. And then friends, apply. You have to also calculate what? Assessable value, that is done 12,000 into 72. which is 8,64,000, and also calculate customs duty payable. So custom duty payable will be as on 10th Jan or 15th Jan, whichever is later. So of course, as on 15th Jan, because as on date of bill of entry or entry inwards of vessel, so later is 15th Jan. So on 15th Jan, it is 10%. So 86,400 will be your basic customs duty, and 8640 will be your social welfare surcharge. Does it make sense? All of you with me? Yes. So just go to solutions, see the presentation. If required, do the presentation. See, 8,64,000 and 86,400. SWS 8640. So total customs duty payable. So is it clear to all of you? Friends, there are many more deeper questions that we will be doing. So I would love to present them with you. Fine. So I think this is absolutely clear to you. And I will now go to next question. Now comes one question. See this. Importer Messrs. Orion Exports Private Limited imported goods. Entry inwards was granted to the vessel on 10th April 25. So entry inwards of vessel is on 10th April 25, and the goods were cleared from Mumbai port for warehousing on 12th April. The bill of entry for warehousing was presented on 5th April. Assessable value was 15,000 US dollar on CIF. Of course, means that is the assessable value. No additional duties payable. Goods were warehoused in Mumbai and were cleared from warehouse on 15th June 25. Friends, the exchange rates and rates of basic custom duty were as follows. So what will you do now? Understand. I would like to tell you something about this also. So what happened? You imported the goods. You have opened, correct now? Yeah. So what happened? We have imported the goods. But imported goods are warehoused. Now what to do in such case? If imported goods are warehoused, first of all, see, they are reaching the port in India. Yes, sir. From port in India, they are shifted to warehouse. This is a customs warehouse. All of you know this. This is a customs warehouse. From there, they are cleared for home consumption. Yes. So here, when they reach the port in India, you file bill of entry. This is called as into bond bill of. This is called as, see, bill of entry. All of you. Yes. This is the original bill of entry. Now friends, you keep the goods in the warehouse, and after completing the warehousing period, you file X bond bill of entry. You file X bond bill of entry. Now friends, as on this date, you should take rate of exchange. As on this date, you should take rate of exchange for computing CIF. Clear? Computing CIF means accessible value. Now, this is also called as into bond bill of entry, because you are putting the goods in the warehouse and you are entering into twice the amount of duty bond. Okay, so it is called as into bond bill of entry, and here the bond is coming to an end because you are paying the duty and clearing the goods, so that is called as X bond bill of entry. So as on date of X bond bill of entry, you take rate of customs duty. Is it clear to all of you? Now the question will make a lot of sense. Now the question will make a lot of sense. See, the bill of entry for warehousing was presented on 5th April. Okay. So friends, as on 5th April, you check what is the rate of exchange. So it is $74, rupee 74 per dollar. So that you will consider. Then the goods were cleared from warehouse on 15 June. So as on 15 June, you take the rate of basic custom duty, that is 12%. That's it. And of course, on that, you will calculate what? The SWS at 10%. So check how you should go ahead and do it. Your assessable value was 15,000. So see, check. So 15,000 into 74 you have done. Did you see this? 15,000 into, yes, Navinji, 15,000 into 74 you have done. That gives you assessable value. So which is 11 lakh 10,000. Now you have calculated basic custom duty at 12%, which is 1,33,200, and on that social welfare surcharge at 10% is 13,320. Make sense, all of you? So see, for warehoused goods, rate of duty and exchange rate applicable are those in force as on filing the X bond bill of entry. So X bond bill of entry is for rate of duty. Okay, so rate of duty is 12% as on 15 June, and exchange rate applicable is on the date of submission of bill of entry for warehousing. That is also called as into bond bill of entry. So as on that date, it is 74. So that's why you have done this type of working. Is it clear? Shall we go ahead? Next. So your fundamentals are going to get clear with these questions. So I thought I should do them in detail. Now, third question. Messrs. Zenith Exports Private Limited exported goods to Germany by air. So friends, now we are talking about Indian company which is exporting. Now in case of exports, do you all know that assessable value is FOB value? Again, in case of exports, assessable value is FOB value. So what is the FOB here? It is US dollars 1,20,000. So that is going to be assessable value. And in exports, there is no SWS, and the rate of exchange is taken as on date of presentation of shipping bill. So as on date of presentation of shipping bill, it is 74. So 1,20,000 into 74, 88 lakh 80,000 will be your assessable value. And as on the date when let export order is given, or you can say that he gets permission for loading the goods on the ship, as on that day, whatever is the rate of export duty that is taken. So that happened in this case on 12th April 25. On 12th April 25, the rate of customs duty is 12%. Got it? So 88 lakh 80,000 into 12%, that's going to be 10 lakh 65,600. Friends, in such cases, you don't have SWS. That's what I told you. So just go ahead, check the answer. Then I will write that provision, that principle in short, so that it will be easy for you to remember. See, assessable value for exports will be FOB. Okay. Now, rate of export duty is as on date of let export order. Okay. And exchange rate should be taken as on date of submission of shipping bill. So that is how much? That is 74. So 88 lakh 80,000 and export duty will be 10 lakh 65,600. Is it, friends, 100% clear to all of you? Yes, before I go ahead, yes, I want to do this summary for you. For exports, what happens? So in case of exports, there are only two things that had to be done. One is, what is the assessable value? So assessable value is nothing but FOB. FOB price. Okay. But convert, if it is at all in foreign currency, then convert in rupees by applying rate of exchange as notified by CBIC as on date of presentation of what? As on date of presentation of shipping bill. Make sense? Then friends, what about rate of export duty? So rate of export duty should be taken as on which date? So it should be taken as on date of let export order. As on date of let export order. Clear? Or you can say that, see, as on date of let export order, or you can say that as on the date when proper officer means proper officer under customs allows loading of goods, on the conveyance. Clear, friends? And one more thing, remember, that no SWS in exports, no SWS, no social welfare surcharge. Clear? All of you comfortable with customs till this point? Naveen ji, Nimmi ji, let's go ahead. See. Orion fourth sum. Now, Orion Machines Limited India imported a machine costing 19,500 US dollars from Alphatech Corp Germany through vessel. Means it is not by air, it is through vessel, that is through a ship. You have to compute assessable value of the said machine under the customs using Customs Act. Okay, let's calculate assessable value. Transport charges from factory of Alphatech Corp to the port of shipment. Friends, you should add this because your FOB will be complete only when such things are added. So to give you perspective, here is the factory of exporter and here is the port of exporter. Price at the port of exporter is called as FOB and we have to calculate CIF. So this price, anything incurred here should be added. Freight charges from Germany to India, these are the actual freight charges here, 10.2. So you should add this as an adjustment of 10.2. Handling charges paid for loading the machine on the ship. So basically, these handling charges are incurred here for loading the goods on the ship. So this also will be added. Buying commission. So what did we discuss? You can include any commission except buying commission. So neglect buying commission. And exchange rate given is 62. And actual insurance charges paid are not ascertainable. So friends, when insurance charges are not given, you should take 1.125% of FOB. Make sense? Yes, sir. So take on your calci 19,500 plus 950 plus 120. So see, 19,500 plus 950 plus 120, 20,570 is the FOB value. Now once you have got FOB value, please what you will do, add transport actual 2,200. This is actual, this is given, this is by way of ship. So basically you will take entire amount and then for insurance you should take 1.125% of FOB. So 231.41. So you are going to get CIF value but in terms of US dollars. So 20,570 plus 231.41 plus 2,200. So 23,001.41 is assessable value. Please convert it in rupees term by multiplying by the given rate of exchange. So friends, actually the answer should be check. The answer should be 14 lakh 26,087. Are you getting this answer? 14 lakh 26,087. Yes. Fantastic. Shall we go ahead? Have you completed? Did you understand? Yes, sir. Absolutely understood. Fantastic. Let's go ahead now. Let's dive deeper. Messrs. Novatech Private Limited imported specialized equipment from South Korea at FOB cost 2,50,000 won, that is Korean currency. So FOB is given. Now other expenses are given. Freight from South Korea to India port. So it is not said airport. So it is a shipping port. They have been brought by vessel. So you will add this. This is adjustment of 10 to insurance paid to insurer in India 10 to insurance. Designing charges paid to consultancy firm in South Korea add while getting FOB. Development activities in India related to imported equipment. Okay, interesting. Are they part of supply that we have to check? Road transport cost. You will neglect road transport cost from Chennai port to factory in Tamil Nadu. Neglect because this is incurred after importation. Now interbank rate neglect because we want to consider CBIC notified rate of exchange. So it is 0.3520. Payment effected, we are least bothered with at what exchange rate the payment is effected. And commission payable to Indian agent, this will be included. This is other than buying commission. This is other than buying commission. So you should include this while computing FOB itself. So it is 6% of FOB value in INR. So what you will have to do in this case is you will have to get FOB, I mean one subtotal, convert it into rupees before getting the FOB. See now, FOB of the machine given is 2,50,000. No doubt in this. Designing charges paid in South Korea is 40,000. They will be included as 10-1. Clear, na? I hope it's all properly going for the YouTube students. Yeah, yeah, it's properly going. Then go ahead. Commission you will add. Okay, 6% of FOB in INR. You will add the commission. So 6% of 2,50,000 you have taken. 15,000. FOB value of customs. Finally, you got FOB value for customs means as per customs after adding the designing charges and the commission. Okay. So now FOB including design and commission will be, yes, check. You will convert it in rupees. Then what you will do, you will add the freight and insurance. Problem is freight was given in won, that is the foreign currency. You convert that in rupees and do the adjustments of 10 to, you will finally get the accessible value in rupees. Let us do that. Friends, let us do the entire sum. That's what I feel. Question number is 5. Let's do question number 5. So computation of accessible value in case of imports, computation of assessable value in case of imports, particulars. What you can do is currency and amount. So start with FOB as given, means that might not be FOB as per customs. It is FOB as given. It is in foreign currency. One, it is 25,000. So far so good. Now friends, go ahead. B point, but this is not final FOB na. So freight is fine from South Korea to Indian port. That is adjustment of 10(2). From exporter's port to importer's port is adjustment of 10(2). Then you have got insurance, that is also adjustment of 10(2). Then designing charges paid to consultancy firm in South Korea. So of course add designing charges. Add designing charges which are also in 1, which is 40,000. Okay, it is as per rule 10(1) of customs valuation rules. After that, go ahead and add. See, development activities are in India in related to imported equipment. So it is what you can say. It is a not a part of your buying. So you have to neglect it. We'll write note for that. And also for road transport, we will write the note. Now what is remaining is commission. Now commission is 6% of FOB value. So this commission is again as per rule 10(1) of customs valuation rules. It is also in 1, and this commission is how much? It is 6% of 25,000. So isn't it 1,500? So you must have got, therefore, 25,000 plus 40,000 plus 1,500. You must have got 166,500 as your FOB. As your FOB. Okay. For customs. FOB as per customs. Anything remaining in that? Who will take main? Acha, main is not 25,000. It is 2,50,000 by the way. It is 2,50,000. My bad. Please take 2,50,000. So 2,50,000 plus 40,000 plus 1,500. 2,91,500. Please convert this in rupees. Converted in rupees. Okay. Because the transport cost, that's fine. Transport cost is in 1, but insurance is in rupees. So now, please at this point convert in rupees. Rate of exchange is point. So 291,500 into 0.3520. You must be getting 1,02,608. Now you go ahead and do adjustments of rule 10(2) of customs valuation rules. What are these adjustments of 10(2) of customs valuation rules? First one is transport. So in transport 25,001, now you will have to do 25,000 into 0.3520 because now everything is in rupees. So are we getting 8,800? And for insurance, it is already given in rupees 12,000. So now tell me what is therefore assessable value, because that is nothing but CIF value. So in the FOB, when you add transport and insurance from exporter's port to importer's port, you get assessable value. It is 1,23,408. Are you all getting? 1,23,408. Was that your answer? Check. And now, okay, designing charges and commission. I hope we added both, right? Yeah. Commission was how much? Cha, 2 lakh. My bad, my bad. 2,50,000 into 6%. So that also should have been 15,000. Earlier I took this FOB incorrect, na? So 6% of actually 2,50,000. So this was also 15,000. My bad, guys. So 2,50,000 plus 40,000 plus 15,000, 3,05,000. And now 3,05,000 you convert, you will get 1,07,360. In that you add 8,800 and 12,000. You will get 1,28,160. Makes sense now? 128, 160 should be final answer. So for this calculation mistake itself, if they happen, I have kept this, hints, because many of you may not reply quickly. So that's it. This completes our fifth question. Shall we go to next? So chalo, this we can now push to tomorrow, 14/12. Now friends, please understand few things. This also push to tomorrow, 14/12, the based on rules. I'll explain you those rules tomorrow and we'll do that. Just 1 second, I'm putting laptop on charging. Yes. Eighth question. I want to do one such question now, which has this also. What? Calculation of various duties also. Today I want to do one such question which has calculation of duties also. Yes, yes. So I think this question we can do. 11th. Shall we? See, last question for today. Yash Enterprises Private Limited imported a replacement machine from German in Feb 2025. We are doing 11th question on page 139. We are going to solve this in detail. Since the earlier machine imported from Japan in April 2024 for 50 lakhs was sent back for repairs under warranty. But anyways, they have imported the machine now of 55 lakhs. So they will have to pay the duty. So 55 lakh becomes assessable value. The freight charges incurred for the import, so actually not direct assessable value, it is FOB value. Freight charges incurred for import were 2 lakhs. So this is adjustment of 10 to. Cost of insurance is calculated at 1.125% of the machine value. So friends, 55 lakhs into 1.125%, which is 61,875. Again adjustment of 10 to. So at this point, what will you get? At this point, you will get CIF value. Applicable basic custom duty is at 10%. Even if not given, you know SWS is at 10% of BCD and IGST is 12%. That's it. You have to calculate assessable value, that is CIF value, and total customs duties payable. Are you ready? Shall we solve it? Yes, sir. Let us solve. So see how to do it. You got FOB 55 lakhs. You added freight. You added insurance. This is as per 10 to. You got assessable value. Now you get BCD, which is given at 10%. Then get SWS, which is given at 10% of BCD. You will get assessable value for IGST. Then you calculate IGST at 12%. You will get total cost of imported goods, and accordingly you can get customs duties payable. Let's calculate. Let's start. Question number is 11. So friends, question 11, whatever page 129, I think 139. Let's do it. Give the heading computation of assessable value and sorry, so much acquainted now. Doing GST from last minute is now. So computation of assessable value for imports and total customs duty payable. Make sense? And by the way, in last question, we did not write those notes that post importation transport cost will be neglected, and even the expenses incurred in India for installation of that machine, etc., will be neglected. So that notes you should have written in the last question solution. Okay. So I hope you will write that. Okay. Particulars. Here from the beginning, everything is in rupees only. There is no foreign currency involved. So directly I can say amount in terms of rupees. A point, FOB value of machine. What is the FOB value of machine? So FOB value of machine is 55 lakhs. You add, now what are you adding is adjustments or items as per rule 10(2) of customs valuation rules. In that, first one will be transport. So transport is how much? 2 lakhs. And then you have got insurance. Insurance is given as 1.125% of 55 lakhs. So isn't it 61,875? So can you get what is your CIF value? That itself is assessable value. So isn't it 57 lakh 61,875? 57 lakh 61,875 is CIF value, that is accessible value. Now starts basic custom duty at 10%. BCD is at 10%. So you can round off, friends. It is 5 lakh 76,188. Then you will do SWS at 10% of basic custom duty. So it will become 57,619. Now tell me what is therefore assessable value for levy of IGST. So isn't it isn't it 63 lakh 95,682? Now therefore IGST at given 12%. So isn't it 7 lakh 67,482? Now friends, are you getting therefore total cost of imported goods? Are you all getting total cost of imported goods as assessable value plus BCD plus SWS plus IGST, means eventually 63 lakh 95,682 plus 7 lakh 67,482, that is 71 lakh 63,164. Yes, sir. 71 lakh 63,164. Now tell me, what is therefore total customs duty payable? Isn't your total customs duty payable BCD plus SWS plus IGST? That is 576,188 plus 57,619 plus 7 lakh 67,482. So are you getting 14 lakh 1,289? So 14 lakh 1,289 will be your total customs duties payable. Or one more way of calculating that is H, that is total cost of imported goods minus the assessable value which you got in C point. You will get the same answer. H minus C, that is 71 lakh 63,164. 71,63,164 minus 63,95,682. Are you getting, sorry, 5761 875? You must be getting 14 lakh 1,289. Check. Check. See this. Some 1 rupee rounding off difference. But otherwise, clear, friends? So I hope you all have followed today's session. Have you? So I'm 100% sure that you have liked the video also by your heart also, and on the YouTube also. You have already subscribed to the channel. You have hit the bell icon and you are sharing these videos with those who need it. Please do that, because sharing is caring, and the blessings will return to you. Obviously you are helping someone, because see, sums is the place where students might get stuck up. We have exactly pinpointing that issue, and now from now onwards there should be no problem in any of the sums. Okay, so any doubt you get, please feel free to contact on this number. This is 9028777829, and do check description to this video. You will get the way to download these notes. Okay, so thank you so much. I'll see you in the next session with lot of more questions from different topics. Of course, value under imports also will continue. In that there are rules also. We'll do some questions of that as well. Also we'll do questions of other types of duties like anti-dumping duty, anti-subsidy duty, safeguard duty. Okay, thank you. Bye bye. Take care and stay consistent, because in your CA, that C stands for